Yeah, wonderful. I see Jenny. That's great.
Yeah.
So let me jump into this, folks, and I'll share with you as I'm getting this, and you'll be able to see this throughout on your screen as I dig into different regions. One of the things that's really cool. So I'll start with kind of a general market update first to start, and then I'll go into kind of the specific markets that I usually tap into, and I'll show you some specifics on the rental market. But before we kind of get into the nuts and bolts of it all, let's go back to high level. First and foremost, I want to share this with you. And I was talking to Patrick offline. Check this out, this number. So in Ontario, on my map right now, as you can see, there's 44,207 properties available. Now, if you kind of rewind to just, I don't know, February perhaps, Patrick, maybe March, well,
Early
maybe
first quarter. We'll say the first
first
quarter.
quarter, yeah, January, February, March, this number was actually like 33, 32,000,
Yep.
31,000.
Yep.
And now we're at 44,207. And that just shows the amount of volume and the supply that has come onto the market in terms of reseller. And the question is what does that do to the markets? Well, you can see here, and this is what we love about this map, is we can see just at a glance with the color codes what's happening to each particular market. So you can see here I'm under price change 30 days. So Ottawa has been stable, neutral for the last 30 days. Kingston has been going up. Belleville has been going down. Peterborough has been neutral. The kind of greater Oshawa area has kind of been neutral. You can see that kind of inner core of Toronto, Toronto, Scarborough, Markham, Richmond Hill, that's actually all red here. There's one little segment here of Toronto that's green, but there's quite a bit of red. Like the closer you get to that Toronto market, the more red you're seeing, which is in the last 30 days, that means prices have been coming down. And then again, as you move away from Toronto, Hamilton, St. Catharines, Milton, London, Niagara, Fort Erie, you can see more and more green. So that's the price changes in the last 30 days. Let's look at the price changes in the last 90 days. Not a whole lot different, frankly. In the last 90 days, Ottawa's on a bit of an uptrend. Kingston's neutral. Belleville is going down. Now, realize Belleville had a massive run up. But Belleville in the last 90 days has gone down. Peterborough has been neutral and stable. Same with Oshawa, same with Ajax, same with Pickering, same with Whitby, this whole area right here. And then again, back to the Toronto area, there's quite a bit of red. There's a few pockets of green, but quite a bit of red in terms of the 90-day trend. And again, as you get away from Toronto, Hamilton, St. Catharines, Milton, those areas, London, still green. So you can see this is something that, and some of you have heard this to ad nauseum over the years, but real estate is regional. You can't say the prices in Ontario have collapsed. You can't read what's happening in the headlines around the condo markets and apply that to every asset class in all markets across Ontario. You really have to go do your research, and that's what we're here to do. So very, very cool in terms of price changes, 30 days, 90 days. Now let me show you property demand, which means are we in a buyer's market? Are we in a seller's market? Or are we in a balanced market? Some buyer's market. Again, the closer you get to Toronto, the more you're in a buyer's market. Okay. Now notice that there's a bit of a correlation between the red of the price changes and the property demand, which means the more red you saw in terms of the property the price changes over the last 30 days, 90 days, if you saw red there, you've probably seen some green here, which means they're in a buyer's market, which means it's a good time to buy. On the flip side, the further you get away from Toronto, a lot of balanced market. There's only one market in all of Ontario that is a seller's market, and is London. London right now is defying the odds. It is a seller's market. The rest are either balanced or a buyer's market. Now, this one I love, which is what's happening with rents. This is what I'll dig into in a second. But you can see here, and when I say what's happening with rents, these are the last 30 days specifically. And this chart, in order to give you the color codes, it takes all of the rents and it averages them, okay? I'm going to get into specifics on like 3-bedroom, 2-bedroom, entire house, 3-bedroom house, 4-bedroom house. I'll show you that in a second. But in general, if you average the rents in those communities, Ottawa's been climbing in the last 30 days. Kingston, Belleville has been neutral. Peterborough has been going down, and I'll show you why. I got some interesting data there. That Oshawa Whitby area has been going down. Toronto and that kind of inner core of the GTA is a lot of rents increasing or neutral. Like Markham has been increasing, Richmond Hill's been increasing, Newmarket's been increasing, Barrie's been increasing. So there's quite a bit of increasing rents depending on which market you're in. Oakville, as you can see, has been increasing. Hamilton and Burlington has been essentially neutral and they've been stable. Same with Kitchener-Waterloo. London increasing. As you get closer and closer to Niagara, rents have been increasing. So check, this is probably my favorite chart, which is what is the upside rent potential. Now, let me, in case you haven't heard my spiel on this, this is my favorite because it tells you where the market is going. The rent I just showed you, that is the rent change in the last 30 days. That tells you where the market is in relation to where it was. So that's okay, but that doesn't tell you where the market's going. It doesn't predict what's about to happen. And if you're investing in real estate today, and if you have an apartment that has come up for lease and you need to rent it, you're going to try to figure out, okay, where's the market going? Where could I rent this? Right? Should I try to push the market or not? If you're thinking about renovations, you're asking yourself the question, should I put in a premium, laminate? Should I put in a luxury vinyl plank? Should I put in like the better countertop so I can get more rent, or should I not? This chart helps you make that decision. Green, all the green markets mean a strong upside rent potential, which means because rents don't go up like this, right? They don't go in a straight line. They go up like this. So the question you're asking yourself, and you'll see this as I dig into the back end data in a second, but are you at the bottom? Are you at the trough about to go on a bit of a rise? Or are you at the peak about to go on the other side of the peak, meaning the upside rent potential in the future is lower? And that's what this chart tells you. And you could see Ottawa, Barrie, Innisfil, that Newmarket area, the kind of Aurora, Richmond Hill, Markham, Toronto, Hamilton, that's all upside rent potential, which means the rents in the future are based on the artificial intelligence and the algorithms. The rents of the future will be better than they are today, most likely. Now, Belleville, Oshawa, Bowmanville, Whitby, Ajax, you can see those are red. Same with that patch of Kitchener-Waterloo. Now, before, if you're investing in those areas, I know what you're thinking. You're freaking out. You're thinking, oh no, my rents are going down. Not necessarily. It just means that in the future, you're not going to get the kind of growth you have been getting. You are at the peak of a growth cycle. So you're going to have to let the market breathe. That's what I call it. You need to let the market breathe for a little bit before you can go on another run. Doesn't mean that your rents are going to go down significantly. Doesn't mean that instead of getting $2,300 for a 3-bedroom, you're going to get $1,800. No. Don't freak out. Just means the future is going to get, you're going to have to let the market breathe a little bit and catch up. So love this chart. It's one of my favorite charts. And hopefully you can identify your market here on this chart as I dig into the back end of it. Any questions on this? Any questions? Put it in the chat. If not, I will rock and roll to the back end. So here's the back end, and feel free to put questions as I go, folks. I'll happy to answer them. So let me take out Peterborough. And if you got any markets you want me to cover, put them in here. I'll cover the most common ones that I know you guys invest in. I'll start with Peterborough because it's my favorite. And it's the one I play in the most. So as you can see here, Peterborough, I got what's active here is the red. The red is 4-bedroom homes. The blue is 3-bedroom homes. The gray is upper 3-bedroom units. The green is lower 2-bedroom units. So you essentially have the duplexes here, and then you have entire homes. This is why, check it out, you could see how the upside rent potential of Peterborough, right, wasn't green. Remember, if I just showed you on the other chart, it wasn't green. And the reason, as you could see, you've been on a bit of a downtrend here in a little bit, but for 2 bedrooms, even for 3 bedrooms, even for 3-bedroom homes. 4-bedrooms home have been on a bit of an increase recently in the last month and a half, 6 weeks. But most of the rents are on currently on a bit of a downtrend. Now, that doesn't mean they're going to keep going down. It doesn't mean, what it means is the market reached a saturation point. And this happens in every single market across the country. Like I said, as you can see, the markets grow, but they grow and they go up and down and up and down and up and down. And they, over the long term, continue to accelerate. But in the short term, you may be on a downtrend. And you can see that in Peterborough here. So 3-bedroom apartments have went from 2650, which is really high for a 3-bedroom apartment. Like, that's really high. I wouldn't tell the average client of mine at Visture Property Group, Visture Property Management, you're going to get 2650 for your 3-bedroom apartment. I wouldn't say that. I would say you're probably going to get somewhere between 23, 24, 2450. And if you could see right now, look at this, the market's at about 2450, which is exactly where it should be. But if you look back to where it was years, a year, 2 years, 3 years ago, it's significantly ahead of that. It's up 10%, it's up 15%. So does the season affect these numbers? Schools are out for the summer. Yes, Catherine, 100%, especially Peterborough, for example, has definitely driven a little bit by student. The student rental market is big in Peterborough. So no doubt, you're absolutely right. Seasonality has a big effect on it. Winter, like that December period, that kind of December to February period, you're going to see that same kind of lull. So that's why it's important not to freak out. And I'm really glad you brought that up, Catherine, because, a lot of people look at these numbers and they start getting panicky about it. There's nothing to panic here. It's just the market doing what the market does. So you can see this is where Peterborough is at in this particular case. The rents are still phenomenal, and the price to rent ratio in Peterborough is one of the best, especially as prices have pulled back a little bit from the highs. Peterborough's got one of the best price to rent ratios if you compare it to other similar markets like, Barrie, like Aurelia, like, kind of the Oshawa, Bowmanville. All of those markets have a price to rent ratio that's more aggressive than Peterborough. So let's look at a couple others. Let's look at, what is it? Put it in the chat which one you want me to point out. I'll go to Barrie because I just talked about that. Now Barrie's actually really interesting. Just loading up here. There you go. So Barrie, you see, it's got a lot less jagged edges, right? Not so many ups, not so many downs. Much more flat, much more smooth curves. The reason is because it's a bigger market. The bigger the market, the smoother the curves. The smaller the market, the more jagged the curves. The more ups and downs you get. Like if and Patrick knows this, having been a significant investor in Grand Prairie, it's ups and downs, when you have less inventory. But on the flip side, more inventory does lengthen out, and we've seen this, and there's investors here on this call. I manage some of their properties in places like St. Catharines, like Hamilton. These are much bigger markets, and what happens to those markets is when there's a lot more inventory, you have smoother curves, but also the days on market often takes a little longer to fill. There's no doubt about it, and that's just par for the course. So as you can see here with Barrie, very, very stable. I mean, prices are not going anywhere. You're just going to have a solid market there. And you can see that the 2-bedroom lowers are about 1,900. You're going to see here 3-bedroom uppers about 2,500. You're going to see entire homes are about 2,750, 2,800, and 4-bedroom homes are 3,100. Now, on that note, before I move on, and I will, someone asked about Kingston. Mary, I'll show Kingston next. But this is fascinating because look at this, and you're going to see this with every market I show. Every market I show, you'll see this, where the price for a 3-bedroom upper unit, the rental for that compared to a 3-bedroom house is very, very little. You're only ever going to get $200 or $300 more, maybe 400, to rent the entire house as compared to renting an upper 3-bedroom unit. This is why duplexing, adding an accessory suite, adding a rental suite, adding a basement suite, adding an ADU makes so much sense, because if you look at an upper 3-bedroom, 2,500, a lower 2-bedroom, 1,900, put those two together, that's $4,400. There's no damn way you're getting $4,400 from a single unit, whether it's a 3-bedroom or a 4-bedroom or a 5-bedroom. You're not going to get $4,400 out of it. So you're decreasing your risk, but you're increasing your revenue and your profit overall. It's a win-win all around. So let me get over to Kingston. Kingston. Put the questions in the chats, folks, if you have any. Yeah, for sure. And some markets, I like Catherine's train of thought there. Some markets suffer more from seasonality than others, no doubt about it. One thing I have noticed is the more student rental there is, and the smaller the market, the more it will have ups and downs of seasonality. Like Barrie's a big student rental market, just like Peterborough is. But Barrie's a much bigger market than Peterborough. I'd say much. I mean, it's a bigger market. It's not triple the size, but that does smoothen out its curve. So look at Kingston. So if you look at 2 bedrooms for Kingston, $1,800, and they are now, look at Kingston back. The numbers are right now they're down to $1,800, but Kingston, at the tail end of last year, October, November, you were getting $2,000 for your 2-bedroom units in Kingston. So definitely Kingston is down a little bit in terms of rents. Kingston's a huge student rental population. 3-bedroom on the flip side is up. 3 bedrooms are over 2,500. And if you look at, if I looked here and I showed you this graph, upper 3 bedrooms, look at the distribution from 2,400 all the way up to 2,600, maybe even 2,800. But I would say if you asked me, JG, what can I get for my 3-bedroom upper unit in Kingston? I would say somewhere between 2,400 and 2,600 is what you're going to get for Mary. 2 bedrooms. Let me show you 2 bedrooms, like a lower 2-bedroom unit. You're going to get somewhere between 1,800 and 2,000. If you, it looks like you can definitely push it, right? There's a good 10, 5. There's like 20% of the market, that premium part of the market, that is 2,000 to 2,200. So you'll be able to push the market a little bit, but most of them rent in the 1,800 to 1,900 on the 2-bedroom lower unit. Let me compare that, Mary, just for fun. Hopefully you guys are finding this educational. Please tell me if not, I can cut this short. But let me compare this to Peterborough. And again, just because I know Peterborough. Look, now you see the difference in distribution? The distribution in Kingston was 1,800, 1,900, some 2,000, very little in the 21, 2,200. But look at Peterborough. The distribution of the rent is to the right, which means most of them rent in 2,000 and 2,100 and some 2,200. So in that case, you're going to get a better rent in Peterborough. So if you were comparing markets, and this is just for education's sake tonight, I'm just having fun explaining some things, but if you were comparing 2 different markets and if you were thinking, should I invest in Peterborough or should I invest in Kingston? Well, you would, and there's no right or wrong answer to it, but you have to be able to predict your rents accurately, because if you do, you'll be successful. And if you're short, like if you think you can get 2,400 in Kingston, and that, Patrick, that is a mistake investors make all the time, is they conjure up the hopes and dreams of what
Make
they
the math,
right? They make the math work when in
Yeah.
fact it's not going to work.
Yeah.
What other markets you guys want me to cover? Let me check Ottawa. I'll check Ottawa real quick. So check it out. Look at 4-bedroom houses in Ottawa. Look at that curve. Just been skyrocketing. I mean, geez, at 2,800 not too long ago, now up to 3,600 and beyond. And if I looked at the distribution of 4 bedrooms, look, it's 3,600 is the average, but really there's quite a few of them renting for 38, 39, even like, look at this really long tail. That means there's some 4 bedrooms renting for, well over 4,000. The average is 3,600. 3-bedroom homes, and again, and look, this is actually a really good illustration here. Let me make it bigger. And you'll find this in most markets, where, look at the difference. 3-bedroom apartment, 2,600. 3-bedroom home, 2,769. It's $169 difference.
Yeah.
But it's very low. And look right here, in April of this year, 3-bedroom apartments were worth more than 3-bedroom homes, right? And that's fascinating. Again, that's why you have to densify your properties. If you're sitting on a single family uh, rental, and your plan is to keep it in your portfolio for a very long time, you don't ever plan to necessarily move into it yourself. Even if you did, you should do a self-funding house. You heard all about that tonight. But the point is, if you're sitting on a single family that's only got one door and it's a house and it could be converted into a duplex, meaning it could be an upper 3-bedroom and a lower 2-bedroom or vice versa, whatever, the additional income you can get from that is an absolute no-brainer. So there's Ottawa. You can see 2-bedroom rents in Ottawa, very strong, very smooth, and just growing. Tick, 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 tick for 2 bedrooms in Ottawa. 2050, 3 bedrooms, very strong as well. So Ottawa, very, very strong over there. What other markets you guys want me to cover? Let's cover, I see Jules here. Let's cover Aurelia. So look at Aurelia. First of all, notice right away, look at the chart. Very jagged, right? You can see it's up, it's down, that's the smaller market. Aurelia is much smaller than a Barrie, for example, but one of the best markets, one of my favorites, that's for sure. Again, Aurelia, price to rent ratio in Aurelia, Jules will tell you, incredible. The price to rent ratio is unbeatable in Aurelia, especially when you're next door to Barrie. And a lot of people that work in Barrie live in Aurelia because they prefer to live in Aurelia. But check it out, 3-bedroom homes in Aurelia, 2,800, 3-bedroom apartments in Aurelia, 2,500, 2-bedroom apartments in Aurelia, 1,850, 4-bedroom homes in Aurelia, 3,400, right? Now look at the price of real estate in Aurelia compared to, in a duplex in Barrie, you'll pay 900, a million, and 1.1 million for a duplex. A duplex in Aurelia, Jules, you'll pay 650, 600, 650, 700, 750, but you're getting the same rents, if not better, in Aurelia. So interesting. What other market? Alberta. Yeah, I can check. Let me check Alberta. Let me see if I got some data in there. I did a couple months ago with the Austin, Alberta. Partial data, as you can see.
Yeah.
But here it is. So full 4-bedroom homes in Calgary, 3,250 roughly. 3-bedroom homes, 2,682. 3-bedroom apartments, 2,286. And 2-bedroom lower apartments, 1,577. That's one thing for sure. Patrick's right, affordability in Alberta, but the rents are also lower in Alberta. Like by quite a bit, the rents are lower. So yes, you're purchasing at a lower price. Entry level, entry price is lower, but your rents are going to be lower. And that's one of the things that and it's good for affordability, and you're gonna have to run your numbers whether it makes sense for you. So Calgary, as you can see, pretty stable though, very, very stable. Again, all heading in the right direction. Let me see if I got Edmonton. Yeah, so look at Edmonton, 3-bedroom, $2,000 for 3-bedroom, upper unit, 2-bedroom, lower unit, $1,400. 3-bedroom home, 2,160. 4-bedroom home, 2,500 roughly, but all heading in the right direction. As long as they're growing, that's what counts.
Yep.
Other markets you want me to cover, ladies and gentlemen? I'll cover one more for fun, which is London. You guys saw London was doing quite well, and as you can see here, from a rental perspective, very stable. 2450 for a 3-bedroom upper, 2-bedroom lower, 1706. 3-bedroom entire house, 2,700. 4-bedroom house, 3,100. And again, all heading in the right direction, very stable. And if you look where they started, where we started tracking them a couple years ago, at least on this graph, you can see they're all up significantly. 4-bedroom homes are up like 20+%. 3-bedroom homes, same thing. Essentially everything's up somewhere between 20 and 25% in London. And I'll cover the last. There's another investor here that I know is interested in St. Catharines, so I'll cover that. And you see St. Catharines here. So very stable here. And as you can see, the difference here is not very much here, folks. Like you see this trending down. You're at 2285 compared to 2260. and that's when I say got the market, you got to let the market breathe. That's often what I mean. I'm talking about 20, 25, 30, 35, 40, $50 a month in rent that things are going to go up and down. That's pretty standard. You can expect that over the course of time. But you can see St. Catharines as a market, very stable, no huge growth here, no huge growth in the last several years, just steady as she goes in St. Catharines. So yeah, Patrick, anything else you want me to cover here?
No, I think you've covered it all. I think it's a good indication that, what is happening is that rents are, you know, uh, not surprisingly, are being quite strong, continue to sustain, continue to, even if they've slowed down to your point, kind of given some breathing room, rents continue to be strong. And I just don't see that changing at all.